I'm Dane, and this is Dan Explains. Have you ever given a thought to how banks make loans? Most of us naively think banks receive deposits and loan the money out to others to make money on the interest. Well, that's not exactly how it works. If it were legal for us to do what they do, we'd all be 10 times richer than we are now. Let me explain why. So if you're a regular viewer, you'll realize this is not my normal content, but I pretty much make videos on whatever content interests me, although that probably hasn't helped me with the YouTube algorithm. But this interests me because of how cheaty it is. Also, I'd like to mention this video is around 5 minutes long, so it's going to be a massive oversimplification. That being said, when I was a kid, I couldn't figure out how banks made money, especially with savings accounts. It didn't make sense that you would give them your money to hold, and sometimes they'd even give you more money back. I couldn't figure out how they made their money, unless they were secretly skimming some hoping you wouldn't notice. But then I was told they make money by taking the money you deposit and lending it out with interest to other people who want to do things like buy houses or start businesses. I was also told they could only lend out up to 90% of the money. That way, as long as people only occasionally pulled money out of the bank could cover all the withdrawals. And that's how I thought it worked for a really long time. Then I started to run some libertarian circles, and found out the truth. The vast majority of the money that moves between banks, especially this day and age, are just numbers, and the law says that they need to keep 10% of the money they loan on hand. On a side note here, this number was actually reduced to 0 at the start of the pandemic, and not put back, at least in the US. But let's keep assuming it's 10% for argument's sake, since the alternative is even nuttier. So let's say you deposit $100 in your local bank in cash. The bank doesn't take 90 of those $100 to loan out. Since the money moves as simple numbers, they loan out $900 with that $100 you gave them, because 900 plus 100 is 1,000, and 100 is 10% of 1,000. This is why banks want your money, because it's worth 9x to them than it is to you. And on top of that, the money they lent to somebody else can be deposited into another bank account, and that bank can do the same thing, although each time to a lesser extent. But in the end, each dollar of cash you deposited can actually back 99 other dollars that are just numbers in a bank's computer. If you've ever looked at a chart on the money supply, you might have noticed that the money is listed in types, like M0, M1, and so on. M0 is essentially cash, money you can stick in your pocket. M1 is money that banks have created out of thin air, just like I described, which includes bank deposits and checks. Anything above M1 is beyond the scope of this video, and it's money you can't just spend like M0 and M1 money, unless you borrow against it anyway. If you get a $500,000 loan for a house, the bank creates $450,000 of that out of thin air in the form of M1 money, which you pay to the person you're buying the house from, who in turn deposits in their own bank account, which can be used to lend even more money, and so on. These kind of shenanigans are why the Fed can change the speed of the economy so effectively, by adjusting the prime interest rate, which makes loans harder or easier to get. If they want to make a bunch of money out of thin air, all they have to do is lower the interest rate. Then the banks will be able to give out more loans, and each loan multiplies the money being used to back the loan by 10. So, more magic M1 money enters the system without the Fed having to print a single banknote. This is also why in times like now, when this video is being recorded in 2024, the Fed has really high interest rates. This makes loans less affordable, pulling magic money out of the system, ideally decreasing inflation. Although, if you have your printing presses still ramped up to maximum power, you get a bit of a dog chasing its tail situation, where the Fed is just stealing money out of the economy to be spent by the government without even having to levy a tax. What was I saying? Oh, the fact that the banks have the ability to create M1 money is one of the reasons why the modern financial system works so well, because the money itself is highly lendable, which is one of the major reasons cryptocurrencies haven't been able to move beyond investments. The immutable public ledger makes it impossible to play these backroom bankers' tricks to lend 10x what it's worth. Although, there may be a way, but that's a story for another video. Thank you for watching. If you like this video, and other topics ranging from theology to science, please press the like button. Subscribe to my channel and ding the bell to get notified when I post new videos. Also, please support me on Patreon to get extra content and special perks. Link in the description. The more people support me, the more time I can dedicate to making videos like this one. So, until next time, have a great week.